And stock of the day, I thought we'd take a look at Audinate, because I remember back to where we ran the series, stocks that could change your life. And one Gaurav Sodhi had Audinate as his suggestion. Of course, a market darling, but it's seen a bit of a pullback of late off the back of its quarterlies. Management warning the component shortages, the chip shortages, are expected to impact its second half performance. So I thought to myself, Gaurav and Mathan in the studio today, a pullback in Audinate, is this a time to get in? Gaurav?
Yeah, look, these are the sort of conditions you hope for as a long-term investor. What ideally you want is you want a wonderful business with a wonderful future that has a short-term blip that the market exaggerates into a permanent state of decline.
Yep.
And I don't think that's quite happened with Audinate. The fall has been relatively minor when you can put in the context of the annual gain.
So what is it, down from 1150 to high nines?
Yeah.
Yeah.
And I think a year ago, I'm sure we bought somewhere around $4. We first bought some in the $2 range.
Right.
I didn't catch on until I think it was well over $4 before I think I bought some. But look,
Okay,
it's
so
gone up.
on that chart there, it's down, what, 20%?
Yeah. So it's a healthy pullback.
Yeah.
And I think that's understandable. I don't think this is a case of the market getting irrational. I mean, it was genuinely bad news that came out in the quarterly. Now, Audinate's, we should explain first of all that Audinate, of course, operates the Dante protocol, which is a combination of hardware and software that allows speakers, amplifiers, AV kit to talk to one another.
Yep.
And it's a network business because if every supplier uses the same chip, every bit of kit can talk to one another.
Yep.
And that's what you want, essentially. So this does tend to be a winners take all market, and so far these guys have about 80% market share. Of the new piece of equipment coming up, the market share, the marginal market share is well over 90%. I think it's safe to say they've got this market sewn up.
Yeah.
The competitive drive is done. It's now really about the monetization.
There was a chart
drive.
in the Financial Review today.
It's in the Financial Review, wow.
Yeah,
they made it big time.
That showed the market share
yes.
of Audinate against its four biggest competitors. It's up here, and they're just all bubbling along the bottom over the last 5 years.
Yeah, the competitive war is over. So it's really now about monetization. And if you're patient, I think this is a business that should be worth billions of dollars in the future. I mean, we've run some numbers on this, and we potentially get, if everything goes great, in 10 years, this could be $50 a share.
Right.
And if everything goes not so great, I think your downside, our guys calculated about $2 a share or so. So those sort of odds look very attractive.
Right.
And I still think they look attractive today because the competitive forces haven't changed. We're talking about a very short-term supply disruption, which if you're looking forward any number of years will likely be sorted out. It doesn't impact the competitive dynamics in the industry. It doesn't change the long-term story. I think this is exactly what longer-term investors ought to be looking for as a sort of entry. Now, we've officially got it as a hold, but look, I think if anyone is a genuine long-term investor, this is a nice time to accumulate.
Yep. Mathan?
Yeah, it's kind of, you come back, you want to have a go, but but look, unfortunately, Audinate is not.
You want to take him on with the first stock,
throw the pot at it. But look, Audinate is a high quality business. There's no doubts. The market knows that. They've executed through a tough macro. Management's well regarded, so you get the ticks everywhere. It's a platform tech, and that's what we look for in a technology stock, is what's a platform tech, because it can dominate the space. Once it's got the space, then the add-on growth stories then come on top of that. That's where the big play is, and Audinate is very good at that. I mean, I suppose right now, if you look at it, Altium and Audinate are probably the two big platform techs for me that are executing well and have a pretty good runway. So you can have a look at what happened through Altium to see what potentially could play out for Audinate. So Gaurav's right. I mean, this could be potentially a $30, $40 stock. I don't discount that. But but I guess we come from a different style, and that's the beauty of it. Now, Altium, again, we got out of all the techs middle of last year. Not because there's anything wrong with Altium. It's just priced for too much. And it's the same thing with Audinate. It was priced for too much. Now it's come back, it'll grind back, and the macro will improve, and then it'll start to run. They'll have more products, and that will get the growth story going. It'll take a bit of time. Now, I think when you get around $9, $10 at the current where they are in the cycle, that's I think around the fair value. So where it is now, you're getting a bit of a discount. It is a high quality business, but again, everything has a but. What's happening in techs matter, and chip shortage, it's going to take longer than what most people think, because the chip shortage is hitting everything, right? So it'll hit them. So
cars,
exactly. So all of these things, like most of the cycles I'm looking at in the cars, it's going to play well into the back end of next year. So these things could drag even longer. I'm not saying just because of that you sell this stock, but I think when those kind of thematics play out, you might get it a bit cheaper. But this is a high quality business. So, if you're buying $10 worth of stock, I'd buy $3 or $4 now.
Yep.
See what happens in a couple of months. And I think over the next 2 to 3 months, a lot of macro is going to clean out. So you might get it a bit cheaper, you might get it a bit more expensive. That's okay. So you buy 30, 40%, you buy another 30, 40% in a month or so, you spread that over the next 3 months. I think you buy this is a high quality business.
This is unusually sage advice from Mathan. Because I think the greater risk is actually not being, look, I don't want to sound like some unhinged bull, but often quibbling over a few cents is, if you found an idea that works, that you think is going to make money over the long term, then sitting here on day dot quibbling over a few cents is actually a mistake. And I've done that a lot in my career, and it's always been a mistake.
It's one of those foundation stocks.
And I think it'll be a mistake today. So I agree, there's a good chance it goes lower again, but buying in tranches is exactly the way to go.
Buying 30, 40% over 2 to 3 months, you get both sides. If it runs, then you buy more, but because you're averaging down your price, then you're okay. You feel you got the buffer. And the investment is about having that buffer. Once you make that buffer of return, then you feel so much more confident and you're willing to hold it the long term. So the entry is important.